Best pick Nikkei market close for June 16. We've got an absolutely historic, highly fragmented, and totally data-heavy trading session in the Japanese equity market to unpack today. For us foreign investors monitoring Tokyo, today really offered a masterclass in market divergence. It was driven by massive macroeconomic policy shifts on one hand and intense micro-level sector rotation on the other. Let's get right into it.
Take a look at this number right off the bat. 70,020.68. Today, the Nikkei 225 actually broke through the 70,000 yen mark intraday for the very first time in its entire history. It's a massive psychological and technical milestone for sure. It really highlights the sheer momentum carrying certain segments of the Japanese market right now, especially those concentrated in specific future-facing industries.
But it didn't hold there. The final closing price settled at $69,404.50. So that's an increase of 87 points, or just a modest 0.13%. Now, it firmly marks the index's fourth consecutive day of gains, which is great, but that pullback from the historic 70,000 yen peak tells a much deeper story about how the market reacted to today's crucial monetary policy announcements.
Section 1. BOJ policy digested by market.
So let's walk through the intraday flow. We actually started the morning with some weakness, which is a pretty natural reactive sell-off following the previous day's big gains. But right at midday, the Bank of Japan released its decisions regarding an additional rate hike and a halt to its Japanese government bond buying reduction. Almost immediately, the afternoon session surged right past that 70,000 yen mark, before ultimately pulling back by the close as the reality of the broader market set in.
Now, you might be wondering why the sudden afternoon surge if the BOJ is actually tightening policy. Well, it all comes down to the market consensus, which was basically within expectations, or in Japanese, sotenai. Because the BOJ's additional rate hike and bond buying reduction were so heavily pre-reported and priced in, the market safely digested the news without any panic. The removal of that uncertainty actually triggered relief buying in the afternoon.
Section 2. AI semiconductors drive a narrow rally. Here is the wild part about today's historic high. Despite the Nikkei hitting an all-time record intraday, a massive 70% of all stocks actually declined today. Only 30% advanced or stayed flat. We call this a classic strong index, weak internals environment. So that historic top wasn't a broad market victory at all. It was a highly targeted, super narrow rally skewed by just a few key players. And here are the specific players that were single-handedly dragging the index upward today. Tracking the record highs from the Philly Semi-Index overnight, Japan's AI and semiconductor heavyweights absolutely surged. Advantest, ticker 6857, closed at 30,340 yen. That's up 920 yen, or 3.13%, right following an analyst price target upgrade to 31,200 yen. Meanwhile, Murata Manufacturing, ticker 6981, jumped 4.67% to 10,530 yen, up 470 yen. Driven directly by expanding demand for AI data center electronic components. Adding to that AI-driven momentum, we also saw SoftBank Group, ticker 9984, post a modest gain. They closed at 7,102 yen, which is up 0.45%. That movement was tied directly to their new announcement about providing advanced AI cyber defense services using OpenAI technology, signaling even more expansion in their AI business sector. Moving on to Section 3. Banking and energy sector shifts. 0.4%. This is a crucial objective data point reflecting exactly how the BOJ's rate hike hits banking margins in reality. Mitsubishi UFJ Financial Group announced today that starting August 3rd, it's going to increase its ordinary deposit rate to 0.4%. That's a 0.1 percentage point increase. This physical manifestation of rising rates is really raising expectations for improved interest margins across the entire banking sector. And this sets up a pretty stark division in today's market. On one hand, we've got clear thematic winners benefiting from macroeconomic and policy tailwinds, specifically banks enjoying those rate hikes and nuclear power. But on the flip side, we have our thematic losers. These are companies suffering from individual corporate missteps or broader headwinds, like domestic travel. Let's zoom in on the energy side for a second. Government policy targeting new nuclear reactor construction by the 2040s directly boosted Japan's steelworks, ticker 5631, up 1.40% to 7,747 yen. The government is aiming for up to 5 new reactors by the 2040s, strictly to meet the massive surging power demands of these new AI data centers. It's a clear policy directive that's forcing a complete reevaluation of nuclear-related equities right now.
Conversely, the market absolutely punished some specific failures today. Travel agency Tabi Kobo plummeted a staggering 21.32%. That was the sharpest drop of the day, driven by a heavily deteriorating earnings outlook. Additionally, Fukuda Denshi, ticker 6960, suffered a sharp drop rooted in a severe corporate governance failure. Their chairman actually resigned after the discovery of a 150 million yen embezzlement scandal.
Section 4. Forward Outlook and FOMC Focus. All right, here is your Horizon watch list as we look ahead. First up is the upcoming U.S. FOMC meeting and Chairman Powell's policy stance that's likely going to dictate the next major directional move. Second is the currency dynamic. The USD-JPY pair is currently holding right at that 160.33 level. A sustained weak yen is a nice tailwind for exporters, sure, but it definitely carries intervention risks. And finally, we've got to watch for rising margin trading costs for retail investors, a direct consequence of the BOJ's rate hike that could really pressure domestic-focused stocks.
Which leaves us with one final critical question to evaluate the true strength of this market. We saw a historic 70,000 yen top today, but with an underlying reality where 70% of stocks actually declined. So will the impending FOMC decisions finally broaden the Japanese rally? Or are they going to expose just how narrow its foundation really is? It is absolutely a pivotal moment for Tokyo equities.
If you found this explainer valuable, please make sure to subscribe and drop a like for daily data-driven insights into the Japanese markets so you never miss these critical shifts. Thank you for watching.